Is this the correction that everybody's been anticipating?
That's the big question right now, and it's looking like this may be it. I think
This may be it. Is there real volume today?
There's not a lot of volume. There hasn't been a lot of volume throughout the last few weeks. Basically throughout the year, there just hasn't been that much volume. But I think the key thing to look at is last week we had a 3-day streak where the stock market fell. People were talking about how the market was showing signs of fatigue. The rally was tiring. And then on Monday, we regained all those losses. That was the big Bernanke.
Yeah, all it took was a little bit Ben Bernanke talk.
Yep. So that was the Bernanke-fueled rally, and then all of a sudden, just everyone basically pretty much forgot about last week. But now, yesterday and today, you're seeing again this drift lower, and so now this will be the 5th down day out of the last 7. And you have a lot of strategists out there who are saying, this could be it. We have some of the most bullish strategists out there. Binky Chada of Deutsche Bank, Thomas Lee of JP Morgan. They're both saying, we expect a 3 to 5% correction over the next few months.
The problem I have with calling this, the beginning of some kind of correction is that everybody's anticipating it.
Right.
And as we well know, these things tend to happen when nobody's anticipating it. So
that's a great
you have
point.
the timing issue. And then second, we have still a couple of days left in the quarter. And so if you're going to kind of do your year-end or quarter-end window dressing, you'd probably wait till tomorrow or Friday to do it, so you'd kind of you wouldn't be a buyer in today's market. Am I getting that right?
Is it the end of the week though? I feel like a lot of people have said that the window dressing aspect of the market actually takes place maybe 4 or 5 days before the end of the quarter.
I said, it's one of
those weird.
Yeah, it's a phenomenon. All I'm saying is that we're coming up to quarter end. Most fund managers will want to print, a strong end of the quarter, as opposed to selling into the end of the quarter. And so who knows what will actually happen. But
so then that brings us to the next quarter, right? Second quarter, which begins on Monday. And what's going to happen? If people are dressing up their portfolios and if they are buying some of the best performers, Apple, Sears, Netflix, if they are doing that, what's going to happen next week? Are people then going to just unload some of these names, which are the biggest performers this year?
We're coming into earnings season.
Right.
When is that kickoff, really?
Right, a few weeks. We're a few weeks away, but still, though, earnings, that I think is the biggest concern right now for the market, because earnings growth is expected to slow. We're only supposed to get like 2% quarterly growth for the first quarter, which is much lower than what we've seen the fourth quarter and what we've seen over the last few years. So earnings are a big concern right now, and it seems like people aren't really worried about it. People are talking about how the economy is getting better, and people are talking about how Europe is not as bad as it was, in the second half of 2011. But earnings still are that's the true fundamental aspect to really focus on when looking at how the stock market is going to perform.
You're starting to talk like me, Steve.